Hey financialist, we're embarking on a journey to understand one of the most iconic chart patterns in technical analysis, the head and shoulders. Whether you're a seasoned veteran or a chart-reading novice, understanding this pattern can equip you with valuable insights into potential trend reversals. So grab your notebooks and get ready to master the head and shoulders. Imagine a classic three-peak mountain range. That's essentially the head and shoulders. It appears during an uptrend, signaling a possible reversal to a downtrend. Here's the breakdown. 3 peaks. The middle peak, the head, is the highest, flanked by 2 lower peaks, the shoulders. Neckline, a horizontal line connecting the lows before the left shoulder and after the right shoulder. Breakout. The price decisively breaks below the neckline, confirming the downtrend reversal. Regular head and shoulders. This is the classic pattern we discussed, indicating a bearish reversal. Inverse head and shoulders, the opposite, with 3 troughs instead of peaks, signaling a bullish reversal from a downtrend. Identify the pattern, look for the 3 peaks, neckline, and potential breakout point. Confirmation, wait for the price to break below the neckline for a bearish pattern or above it for a bullish one. Entry, enter a short position, sell, for a bearish breakout or a long position, buy, for a bullish breakout. Stop loss, place your stop loss above the head for bearish trades and below the neckline for bullish trades. Take profit, aim for a price target equal to the distance between the head and the neckline, measured from the breakout point. Remember, the head and shoulders is not an infallible indicator. False breakouts can occur. Combine it with other technical indicators like volume or moving averages for stronger confirmation. Manage your risk wisely with proper stop loss placement. Bonus tip, hone your skills by identifying head and shoulders on historical charts before risking real capital. Now you're equipped to spot head and shoulders patterns with confidence. Remember, practice, patience, and proper risk management are key to trading success.